Hello, everybody, and welcome to our Facebook Live. My name is Ida Telly. I will be your co host today. So, just before we get started and introduce my guest or my other co host, I'll just a few housekeeping items. So, underneath the video, you have comments. Please make sure to write your question detailed as much as possible, and we will let you start with one question each. Now, to answer these questions, we have our very own Gerry Vittoratos to do that today. Hi, Gerry. How are you?
I'm pretty good. Halfway through the tax. Are we halfway through the tax season? Where are we at right now in the
Is
tax
it
season?
halfway through? It feels
I
like
don't
if it
know.
just started.
It feels just started. Oh man, I that maybe started. It started for me a while ago. So yeah. So what's called? We have our UFile live today. So
Yes.
it's great. We're here to answer questions. Let me just start off with the fact that we're getting absolutely killed right now with the questions about when are the capital gains coming? When are the capital gains coming? When is the program going to be certified? Hello, Anna. So I'll get to your question in a second, and I just want to make everybody aware that the release should be coming by the end of this week. Okay, so by the end of this week, you should be getting the certified version for the capital gains, so you'll be able to file tax returns for the capital gains. If you have any capital gains, you'll be able to file those returns now. All right, so that's what's called so that's something that's coming. All right, so again, no need to call the support line anymore. Call for some other question. For now, like I said, it's coming. All right, so by the end of this week, you'll be able to file those returns using the software. All right, so okay,
We'll
let me have a
start.
look. Yeah, let's start with Anna over here,
Okay,
so
we'll
go
start
ahead.
with Anna.
Yeah,
Uh,
go ahead.
was not aware that I had to declare my 2023 FHSA contribution, so I amended my 23 filing through CRA 3 days ago. I
Hmm.
received a change. My return confirmation indicated line 68935 FHSA contribution with new amount of
Thousand.
$8,000. There
Yeah.
was no option about how to claim this deduction. So will this be automatically used as a deduction towards my 2023 return? If not, can you show me how to enter it in UFile for my 2024 return?
Hmm.
If yes, is there any information I need to include in the sorry, T4 FHSA income? The FHSA information and limits sections when preparing my 2024 tax return to avoid any issues in the future. She did not
Okay.
make any contribution in 2024.
Okay, so Anna, you have a choice. The choices are you either, since now the government has recognized your contribution that you made in 2023, your choice is either to amend your 2023 and claim, in other words, to do the same kind of adjustment that you did before for your 2023, and from there, deduct the amount in your 2023 return, or you use it in your 2024 as a carry forward contribution. All right, those are your choices. Okay, so you choose any one that is basically advantageous to you. Did you make more income in 2023 than 2024? Then claim it in 2023. If not, you claim it in your 2024. So let's say you're claiming in 2024. Let's go into the software. Let me show you a little bit of how that would work. Give me a second over here. I'm just going to share my screen. I'm going to hide you for 2 seconds. Just give me, all right, here. All right. And oops. Yeah, no, it will not let me. Okay, hold on. I'm having a technical glitch here. Okay, sorry, folks. I can't seem to share my screen right now, but let me explain. Essentially, so in the FHSA screen, okay, in the FHSA screen where you're entering your contribution, your limits, all right, you're gonna go to what's called. You're gonna have total. Okay, so you're gonna have an amount of unused FHSA available to deduct on line 21 in your prior year. So there's one of the first lines is unused FHSA contributions. Okay, so that's where you're going to put your $8,000 in. The program will apply it automatically. Again, I apologize. I'm having a technical problem on my end. I can't seem to share my screen, but in this case, that's how it works. All right, so you would enter. It's literally the first line when you go into the FHSA information and limit section. All
She's
right.
also asking on her Relevant 3, there's a 00 in box K, but I
Okay.
do not have a box 30 on my T5. A new file box 30 cannot be empty to proceed with entering something for provincial. How should she proceed?
Well, if it's zero, just don't enter it. I mean, it's if you have nothing there, is box K, right? Interest from linked notes. Okay, so that's simply other income in this case. And then what does she say afterwards? In
She
you file
has
box 30 cannot be empty to proceed with entering something for okay, I see. Okay, so let me go there now. That's a T5 slip if memory serves me. That's the equivalent of
yes.
releve 3. So if I go in there, box 30. Okay, so what you need to do is enter. Yeah, you need to enter 0 in box 30. Okay, and then click on the maple leaf fleur de lis sign. Click on that, and then box K is going to appear. And then at that point, you simply plug in your amount. All right, that's all you have to do. Okay, so you have to physically enter the 0. Okay, in box 30, click on the maple leaf icon with the fleur de lis inside, and then you have your box K, and you plug in whatever amount it is in box K. All
And
right.
her last question for now
Yep.
is I made a $50 donation
Mm-hmm.
and I do not know if I will be making other donations this year. Is there any advantage to not claim the donation now versus waiting to see if I have combined in the future? If she can combine under.
It depends on your income, and if your income is high, then the $50 could be worth it. If not, you're usually better off combining it with other donations because remember that your first $200 of donations, you're only getting about 15% credit on them, or I think it's 20.5% credit, and then you are getting any dollar you go above $200, then you are getting, I believe it's 24% credit on the federal side, and I think you are in Quebec in this case. So in Quebec, it would be the same thing. It would be a higher amount in this case. All right. So let me just go to Schedule 9 one second, just to see if I'm quoting you the right rates here. Schedule 9 T1. Just give me 1 second. I'll tell you exactly the percentage that you would get. But ordinarily, you would want to combine them. So here we go. So I got the percentage wrong. So your first $200 will be at 15% credit, while the every dollar above that will be in this case 29%, right? So 29, yeah. So in Quebec, it's gonna be the same concept. It's gonna be like 24% or 15%. So usually you're better off combining. So wait till you have more donations to combine them, so you get a bigger credit at the end. All right,
Okay, our next
next.
question is from Gabby. I
Mhm.
have some Bitcoins gains. How can I claim them?
Okay, so Gabby, you're going to claim them in capital gains. Okay, very simple. You're gonna add the section for capital gains, and when you are in the capital gains section, let me go here. Okay, I'm just going to do. Sorry, guys, I can't share my screen for some reason. I'm having a technical problem on my end. But when you go to the capital gains, I'll tell you exactly the section that you're going to choose. And in the capital gains, when it's going to present you with all the types of capital gains that you want to claim, you're going to go into bonds, debentures, and promissory notes. Okay, that's the section you need to enter it. Even though it's not a bond and a promissory note, that's where the CRA wants to see it. Okay, so you go in there. If you are in Quebec, okay, in Quebec, there is a special section for Bitcoin or virtual currency. So you choose that one if you're in Quebec. If you're in the rest of Canada, you're choosing the bonds, debentures, and promissory notes section.
Okay, the next question is from Devin.
Mm-hmm,
My stepdaughter is in her first year of university, so she has one semester of tuition paid in 2024.
mm-hmm.
She made 15,000 approximately at a part-time job in 2024. Given that using her tuition in 2024 will not provide any benefit as far as a
Yeah.
refund, how far in the future can she defer claiming that tuition for when she's claiming more income?
So you can defer it indefinitely. There's no time limit when it comes to the carry forward of the excess amount that is not necessary for your stepdaughter's return. Okay. Now the time you will be using it though is once your stepdaughter is taxable. So let's say she's got income that is enough to render her taxable in this case. So basically above the basic personal amount of $15,700 roughly. Okay. Once she goes above that, then she will be claiming the tuition amount automatically because the rule is that you're required to claim your tuition amount to basically level off your federal tax. Okay, so you have and your provincial tax depending on what province that you're in. Okay, so at that point, the moment she becomes taxable is when she will use it, but there's no time limit to the carry forward. It is indefinite until the year that she needs it, which will be the year that she becomes taxable, and then she will be required to use it to reduce her federal tax.
But it still needs to be reported on the tax return, correct?
Absolutely, yes. Yeah, you have to declare it first. That's the key. Even though it's not being used, you have to declare it and carry it forward. That's what Schedule 11 is about. So under Schedule 11, you will be declaring it and carrying it forward to a future year.
Okay, next question is from Eric.
Hmm.
As a liquidator, I'm preparing the 2024 final return for a relative. I
Yes.
don't believe that I can use NetFile for the CRA, but how about Quebec? Also, what do I need to print out for the CRA if I have to submit it by mail,
Okay.
sorry.
So Quebec, you'll fall under an exclusion as well. If you are prepared, you can e-file it, but unfortunately, you can't net file a deceased return, especially a final return. Okay. So in this case, you will have to paper file it. The way you will know what pages to print, whether it's federal, in this case, federal and Quebec, in the tax return screen of UFile, there's a page called Assembly Instructions. Okay, simply click on that page, and it'll explain to you step by step what you need to print in order to submit the paper return to the CRA and to Revenue Quebec.
Okay, next question is Loming Yang.
Mhm.
When I click error at the bottom of the screen, nothing happens. How do I see the errors?
Okay, ordinarily you should be able to see them at the bottom of the screen. Maybe you shortcutted the diagnostic tab at the bottom completely. Just make sure the arrow is pointing upwards. That way you know that it's fully loaded and you can see the diagnostics. If not, just go to the review page. Just click on the review tab at the top, and then the same messages will appear on the review page, which is the third tab. Okay, and once you go there, you can consult them there, and then click on the links that are provided by the review page in order to correct your diagnostics.
In the review page, don't you press on messages on your left
Yeah,
menu
it'll be on
on
the
the left
left-hand
side,
panel.
and
Yeah,
then
it'll be a
you see the
left-hand panel,
messages?
and yeah, but you'll see them pretty much right away. I mean,
Okay.
you'll notice them right away.
All right. Next question is from Brian.
Hmm.
If I was to make payments on a condominium pre-construction in a foreign country, at what point would I claim it as owned?
It's when you've got the deed or the notarized document that indicates that you own the property. As of that moment, you own it. It's as simple as that. So I'm sure you have a contract that for you to make those payments for the pre-construction. I'm sure you've already has signed some sort of legal document that indicates that you own the property. So the moment you've signed that legal document that indicates that you're the owner of that property, that is when you officially become the owner of the property.
Okay, next question is from Ethan. I guess he
Hmm.
wasn't here at the beginning of the session when we first went
Yes.
on live. So,
Yes.
regarding the capital gains, when are you going to be able to file?
Okay, so Ethan, I mentioned this once we started. Okay, the version with the certified capital gains forms will be out by the end of this week. Okay, so just make sure that you have the auto update of UFile activated. And the moment you load UFile, usually it'll prompt you. It'll say you want to check for updates. Say yes, and then the update will happen, and then you will be able to submit your tax return with the capital gains forms. And like I said, by the end of this week, you will be getting that version.
All right. Next question from Eric. Can UFile be used for at all for T3 trust returns for a deceased person?
No, unfortunately, we don't provide that, but we do have a professional software, which we call DT Max. Okay, and through DT Max, you can produce a T3 return, and actually, you could buy what we call a limited license. Okay, so I'll just post the website directly. Okay, so you can inform yourselves of is www.dtmax.ca. I just put it in the chat. So go ahead and click on that link, and it'll provide a phone number essentially where you could call and you could buy like it's our professional software that is offered by Thomson Reuters, which we call DT Max, and you could buy a license of 2 returns, for example. Okay, so we've designed it with that in mind. So just look through the chat right now. I've already posted the link. It's dtmax.ca.
Clifford, I believe we answered your questions. Even though it's a primary residence,
Mm-hmm.
Schedule 3 still gets done, even though you don't have any capital gains. So that will be updated by the end of this week. So
Yeah,
you will be able to file by the weekend.
yeah. By the end of the week, it's there. All
Okay.
right.
Wait, why has the Windows UFile not been updated to reflect the issues of the capital gains? Okay. I
Okay.
know,
Again,
I know, I know the CRA website is showing that we are certified. We did get the certification. We are inserting the changes in the software, and it's going to be updated by the end of this week. So, okay,
perfect.
next. Um, sorry, where was I?
I
That
think it
was
was Anna
Clifford,
again. I think
Wade,
Anna. Yeah,
Eric.
and then Anna
Uh,
again. You see it between Eric and Clifford. I'm just going to post it here.
yeah.
I'm already
How
displaying it.
many years can we carry forward donations for the future?
Okay, so and it's 5 years. That's how long you can carry forward donations. Once you pass the 5th year, they expire. Okay, at that point you can no longer claim those donations. So you have 5 years. Okay, that's how long you can carry them forward.
Okay, Brian, for stocks, do I need to manually add in my capital gains or capital losses, or will the program calculate the capital gains or losses on the amount entered?
No, the program will calculate the capital gains or losses. The key is, of course, you have to enter the original cost or just the cost base and the disposition amount, and then whatever difference between the two, whether it's a gain or a loss, the program will compute this automatically. You don't need to manually input what your gain or loss is. You just have to enter the transactions in the software, and then UFile takes care of the rest.
Okay, next question is from Mr. Prince.
Yeah.
On my T4, there is a box 40, but on new file application, it's in the drop down. So how do I go about it?
No, box 40 is actually a box number that's in the T4. So when you're entering the T4 slip directly in the software, just scroll down until you see box 40 and then you plug it in. That's all. There's no drop down menu there. You just plug it. You just plug box 40 directly into the T4 entry page. There should be a box number already there. And remember that box 40 is already included in box 14 in your employment income. So it's just additional info. It's not going to affect anything on the return. It's already been accounted for in your employment income.
Okay, Looming Yang, can I split foreign property in 2024 with a total cost of over 100,000 with my spouse?
Unless your spouse is a co-owner of that property, then no. You can't simply choose to split a property between you and your spouse if your spouse is not a legal owner of the property either. Okay, so the key is that your spouse has to be a legal owner. If your spouse is a legal owner, then it's no problem. Absolutely, then it's 50-50. You split the cost. Otherwise, no, you cannot do that.
Okay, we're going back to Anna. Going back to my question about Releve 3 and T5, I entered 00 in box 30. To enter 00 for box K, even though box 30 on my T5 slip is blank.
No, my understanding, Anna, was that you had an amount in box K, but nothing in box 30. So the way to get box K to show is that you have to enter something for box 30. So you enter zero, you physically enter zero in box 30, then click on the maple leaf and fleur de lis, and then you enter the amount that you see on the Releve 3 for box K. That what I was showing you as far as zero was to get the program to give you box K. Okay, that's essentially what I was showing.
Devin, yes, the capital gains will include the update for our Windows and our online version,
Yeah.
our web version. Um, Jeanette has 2 questions. The first one, I had to replace my heat pump on my rental property. Can I claim it as a repair or do I have to put it in as a CCA?
If it broke down, Jeanette, then it's a repair. But if you're improving on it, let's say you're getting the super deluxe model versus what you had before, and the previous model was working fine, then it's an improvement and you're adding it to the CCA. But if it broke down and it wasn't usable anymore, and you bought a similar model, to the heat pump that you had before. Is it heat pump? Yeah, to the heat pump that you bought before, then you could it constitutes as a repair in this case. So it depends. There's a lot of factors that you have to take into account. Now, the relative value, you have to also consider the relative value of the heat pump. Usually, a heat pump replacement is very costly, so that could be an improvement. But if it wasn't functional, then you can make the case that what's called it is a repair in this case. But if it was a functional heat pump and you're just buying a newer model, then it's CCA. Then you're making what the government considers as an improvement. And then where the government's going to pinch you as well in that case is going to be the relative value of that repair vis-a-vis the rest of the home, vis-a-vis the value of the home. Okay, so it depends essentially. Just like the dad joke that I say every single time. The first answer to every tax question is it depends. All right, so that's always remember that.
I'll go to her second question. I have more expenses than I have income from my rental property.
Okay.
Can I pass the excess expenses into the next year, or can they be applied to my income?
Okay, first things first, you can't pass them to the following year. You have to account for them in the current year. The good part about these rental expenses is they become non-capital losses, and those losses can be applied against any other income in the year. So those losses will show up as a negative amount on your tax return, okay, on your total income, and then that amount will actually be applied against your employment income, against your interest income, investment income, capital gains, etc., or pension income, whichever other income you have. You could apply them against that income directly.
Okay, Looming has a question. How to tell if I've used up my carry forward moving expenses?
You have to check in the moving expenses page whether you still have the carry forward in the file. Okay, so you would have to look and see, essentially what has the program brought forward the moving expense that you did not use in the previous year into the current year. If you don't have any, if you did have moving expenses last year and there's nothing carried forward to the following year, then at that point there's nothing. Now, the other way to do that is check your notice of assessment as well. Usually the government should provide that information as well, okay, on the notice of assessment.
Okay, Eric, a follow-up question for DT Max software. Is the T3 interface with eFile?
Does DTMax software for T3 interface with eFile? Yes, it does, Eric. So basically, that there's actually two transmissions when it comes to the T3 return. Okay, there's one transmission for the return, which you would use your an eFile number, meaning a prepare number and a passcode, and then you would need to file the slips. You would need a transmitter number, which is purely for the slips, meaning slips like T4, T5, and T3s. They're two separate transmissions that happen when it comes to a trust return. So if you're an e-filer, then you're good to go as far as filing the return, but you would need to get a transmitter number, which is a separate identification number for the slips in order to transmit the slips to the CRA. It's going to be two transmissions in that case.
Okay, Brian,
Mhm.
where do we submit the T4, no, T042S details?
No, 1042. That's what's called that's US. So that's foreign pension income from my recollection. I'm looking at it right now in front of me. So foreign pension, U.S. source income subject to withholding. So I'm seeing here foreign pension. No, foreign person's U.S. source income. Oh no, sorry, it's not pension. I'm sorry. Foreign person's U.S. source income subject to. Well, it depends on the income. Ordinarily, this would be business income. Ordinarily, okay, but again, it depends. It could be something else as well. There's usually I believe there's an income code that goes with it, but I'm not sure. I'll be honest. I'm not as well versed on the U.S. side. But depending on the type of income, I would assume it's business income. You would enter it as a business income, and then whatever tax is withheld, what you would do is you would go into the foreign income section. So when you go to the interview setup of UFile, there's a section called foreign income and foreign property under investment income and expenses. That's in the interview setup. So tick on that box, click next, and then enter the income there with the deduction at source. But a lot of times that's usually business income.
Okay, next one is from Gabby.
Okay.
I'm wondering any changes for the T2200 working from home
Mhm.
this year, or same like last year?
Same as last year, Gabby. There was during the pandemic, we had a separate calculation, a choice that we could make whether we could choose, what we would call the detailed method, which is essentially you're just listing your expenses and then you're claiming a prorated portion of those expenses, of those eligible expenses, or you would claim a $2 per day, a $2 per work day deduction, okay, based on the number of days that you worked at home due to the pandemic. Now that second choice is no longer applicable. That's been gone now since last year, since 2023. It was only applicable between 2020 and 2022. As of 2023, you go under what the government will call the detailed method, which is, again, you're listing all your eligible expenses, which could be rent, which could be internet, which could be heating, electricity, utilities, etc. And then you're claiming a prorated portion of those expenses, meaning you're taking what the percentage of the square footage of your home office vis-a-vis the rest of your home. And that's essentially, let's say, for example, your home office represents 10% of the square footage of your home. That you're only claiming 10% of those eligible expenses. That's how it works with when it comes to home office expenses with employment expenses.
Our next question from Eric. If I wish a tax accountant to file the final return for a deceased during using e-file, sorry, using e-file, sorry,
What
because
file from
something
you
moved.
filed? Yeah.
What files from UFile would be useful to them?
If I wish a tax accountant to file the file, well, listen, if you've prepared the return, very simply, if you could find a DT Max accountant, okay, that's our professional product, which is DT Max. DT Max converts UFile files. So you can actually provide them with your UFile file and it'll convert for them the file into DT Max. Okay, so you would have to find an accountant or preparer that uses our professional software, which is DT Max, which can convert the file. Okay, and at that point, and if they don't know how to do that, they can simply call us. Okay, they could just tell them to call DT Max and we will tell them how to do it. Okay, now if you're going to an accountant that's not a DT Max client, then you have to provide them basically with a PDF. Just get the PDF of the file that you've already prepared using UFile, give it to them, and then they'll reproduce the file and then transmit the return. Otherwise, try to find one of our professional clients, which again, the product is DT Max. The website, I posted the link to the website above. It's DTMAX. That's our professional product, and then they could grab your UFile file and just convert it directly into DT Max and file it for you.
Okay, you're welcome, Jeanette. Anna, do you have to wait for a 2023 notice of assessment, reassessment before filing for 2024?
You don't, on a technical level, you don't, but it would be recommended to do it because remember that you have carry forward amounts that are coming from your 2023 that you could apply in 2024. And the only way you're going to know these carry forward amounts, like for example your RSP limit, for example any capital losses or non-capital losses you have from the previous years, and so on. The only way you would know of these amounts is if you have that reassessment in hand. Okay, but on a technical level, no, you don't have to wait. You can file, but it would be recommended to wait. So that way you have a clearer picture of what your carry forwards are before you produce your 2024.
Next question is from Louise.
Mhm.
For how many years do I have to keep all my tax records? Can I dispose of everything before them?
Okay, so the rule of thumb is usually 7 years. What I recommend is 10 years, and the reason why I could recommend is 10. Why I recommend now the government will tell you 7 years is what the rule of thumb is to keep your documents, but I would recommend 10 years. And the reason why I say 10 years is because you could actually go back 10 years and adjust your tax returns. Okay, so in order for you to adjust your tax returns, you should have your documents. Okay, so at that point, make sure you hold on to your documents for 10 years. Anything above 10 years, at that point, you can no longer adjust, and usually the government cannot reassess unless they suspect that you have committed fraud with your tax return, and then they could go as far back as they want. But usually the CRA limits themselves to 7 years back. But like I said, I will go 10 just for the adjustment factor, just for the fact that I could amend and adjust 10 years back of my tax returns.
Okay, next question is from George. I
Mhm.
have an income from foreign country and pay foreign tax. In the same time, I have a tuition tax credit, but I don't want to use it now. Can I put a zero amount in my return so the foreign tax can be deducted?
The answer is no, because the issue that comes in with tuition, we get this a lot, with tuition, is the fact that when Schedule 11, which is the form that determines your tuition tax credit, determines how much you're required to claim as a tuition tax credit. It doesn't factor two very important amounts, which is the dividend tax credit and the foreign tax credit. Okay, it does not factor those in. So unfortunately, you will be overshooting on your tuition because the government does not consider the foreign tax credit or the dividend tax credit when determining how much of the tuition tax credit you need to claim. So there's not much you can do. You can't force a limit on tuition. You have to follow what the calculation is on Schedule 11, and unfortunately, you will be overclaiming. It's just the way it is. There's nothing we could do there. It's how the government structured the form.
Okay. Greg, where or what line do I claim background check and payment to renew my security license?
Your security license. Greg, can you give me more details on what that security license is exactly? Can you just give me a bit more details what exactly that is?
Okay, we're going to go to Leo in the meantime.
Mm-hmm.
Wife got a notice of assessment reassessment for 2022 for income made overseas. Can we apply capital losses against that income? We had to pay almost 1,000 to from a 3,000 extra income. How can I update files for that year?
Okay, well, it depends on the income. If the income was capital gains, then yes, you can apply capital losses. But if the income is anything other than capital gains, then you can't. Okay, you simply can't apply them. Because capital losses can only be applied against capital gains. Okay, so unless they're capital gains, that extra income, you can't apply that income. Now, as far as how you can, let's say they were capital gains and you want to now apply them. Okay, then what you do is you go back to your 2022 file, make the changes, and do what's called a refile. Okay, which is basically you simply go back to the net file tab. Okay, and at that point, there's going to be an option underneath your in your net file tab to refile the tax return. You simply choose yes, and you resubmit the return. But again, the only way that those losses will have an effect is if that overseas income was capital gains. If not, nothing you can do, unfortunately.
His next questions: can I change the percentage ownership between husband and wife of an income property to try and minimize the total tax?
No, you cannot unless the spouse. You have to follow the legal ownership percentage of each spouse. There's no choice there. We can't play around with that. The only time we could actually split income among spouses is when it comes to pension income. That's it. And you could split up to 50% of pension income and send it from one spouse to the other. Otherwise, you cannot do it. There's nothing we could do there. That it is whatever the legal ownership percentage of that income is. All right, and that's it.
You're welcome, Eric. Lisa, if I co-sign with my son to purchase his first home, do I need to file anything extra other than my T2, like a T3? How about if I gifted him an amount for his down payment? Do I report that on my tax return? I think she meant T1, but
Okay, if I co-signed yeah, this could be remember the filing requirements for T3, right? That the government instituted and they scaled back at the last second, for bare trust in this case. Yeah, because this would be an example of a bare trust. Okay, what you have, Lisa, is that you co-signed for your son to purchase their first home. Now, the government is making an exception to this, so you don't have to do anything to the T3 anymore. Okay, so the government gave an exception, whereas last year, unfortunately, you would have been a bare trust, and by co-signing, if it means that you are co-owner of the property as well, then you would have been required to file a T3 return where you declare yourself as the trustee, and your son would have declared himself a beneficiary on that T3 trust return. Now the government has amended the rules on the filing requirements for T3, and you no longer fall under the requirement anymore. Okay, so you no longer fall under that. If you gifted an amount, no, there's nowhere you need to put that in. It's not a taxable amount in this case if you gifted it. It would be good to have that notarized though, just so that the government would know this. In case they come back to you and say, okay, where did that income amount come from? Where did your son get this amount? And you could prove to them that it's a gift and it's not an income, for example, like something a payment that you gave them for some work that they've done for you. Okay, so no, ordinarily you wouldn't have to do that necessarily. You don't have to report that at all.
Okay, Greg says it's for a private security license in Ontario. Are
Privacy,
you a
is that for
security guard,
yeah, Greg, is
or
that for
you
your
have a
job?
security
Yeah.
a private security company or
Hmm.
something? Would you be able to give us
Yeah, just answer that, and I
that
think I could
information?
I could probably help you there on that one.
I'm assuming it's like a doctor or something like that, where he has
Yeah,
to have a
professional dues,
special,
like
yeah,
professional
professional
dues.
views. Yeah.
Yeah, that'd be a union due then. You would claim it as a union due.
Or
That's
professional. Yeah, there's a form for that professional.
professional dues. Yeah, it would be professional dues in that case.
Yes. So I
Security
guess
guard,
it's the
yes.
guard.
Okay,
Yeah.
Greg. Yeah. So that would be professional dues. So what you would do is, I'll tell you the section. Unfortunately, I can't share my screen. Like I said, I've got a glitch in my case in the system. And anyways, for the next one, it'll be fixed. I'll just contact the vendor of the software that's projecting here. But let me just go in here and show you exactly, tell you exactly. Okay, so when you're in the interview setup, you go to the employment and other benefits section where you're ticking boxes, and then there's going to be a section called union or professional dues not on T4 slips. You tick that box, you click next at the bottom of the page, and then a section just underneath the T4 will appear in your left-hand navigator, which is called union or professional dues. You simply click on that, and at that point, you simply enter it as a professional due. Okay, that's where you enter because it's related to your job in this case.
Okay. Next question is from Kirk. My daughter has an Actra minors trust. How is this treated for tax purposes? Its earnings as a child actor. No,
Yeah.
is it?
Okay. Is that coming in as employment income or is that coming in as dividend income, Kirk? If you could just answer that question. Yeah. Sorry, it didn't show his question.
You're welcome,
Um,
Greg.
yeah, you're welcome, Greg. Sorry, we had to ask a bunch of questions. We wanted to make sure we give you the right answer, so we don't just send you to the wrong place.
Kirk, do you know if it's
Well, let's go to the
you?
next question. We'll
Okay,
come
we'll go
back
to
to
next.
Kirk. Yeah.
Ravi, where can I find a list of 2024 changes affecting self-employed?
Well, for that, I don't think there's a lot of changes. I don't think there's a lot of changes in that. In this case. So not offhand. I mean, I can't think of a lot of changes there. The only changes I could maybe think of is maybe some capital cost allowance, some CCA that has changed where I could claim immediate expensing for certain assets, but otherwise there's not a lot of changes to talk about as far as the self-employment income. Okay, so I think Kirk came back. No, it is held by ACTRA until she turns 18. Okay, so then that means, Kirk, there's really nothing to declare because that means that 25% over 5,000 is held in the trust by ACTRA. Okay, 25% of earnings over. But does she collect any payments from it? Because if it's a trust, then the trust pays the tax. But not, it wouldn't be the child in this case that would pay the tax. Maybe the trust is paying the tax in this case because the trust has an option. It's either it pays the tax and then just pays out the excess amount to the beneficiary in this case, which would be your daughter, um, or or it would be it would be allocated directly to the beneficiary, and then your daughter would be claiming the income on her return. But it depends. Clifford, thank you very much for the really nice comment. Let me just show it over here. Well, you know what? There's no
I knew you were
ambiguity
going to
here.
do that.
I can't give an ambiguous answer. You guys, all of you would kill me if I did that. So there's no way.
Kirk wants
Um,
to know, does she pay tax on withdrawal at 18?
it's at 18. Um, it wouldn't be a withdrawal; it would be an allocation from a beneficiary, essentially. So chances are, yes, the trust would likely pay the beneficiary, and then the beneficiary would be taxed. Okay. Now, it doesn't mean that the trust necessarily closes unless that's the deal in the trust. Okay. That the trust closes when the child turns 18. If they don't, then it's simply going to be an allocation to the beneficiary in this case, and then that allocation will be taxable. And then it'll depend on what type of income it is. Ordinarily, the income is considered property income, which would mean like an interest income or investment income. That's how it would be considered. But yeah, it would be an allocation to beneficiary, and then at that point, it would be taxable in the beneficiary's hands, which would be your daughter.
I'm curious. Is she in a particular show right now? I'd like to watch.
Okay, so I'm going to come back again. We mentioned this before in the video. The certified version for capital gains is coming at the end of this week. So keep on the lookout. Make sure that you update UFile coming up in the next couple of days, and at that point, you will be able to have capital gains. Okay, you will be able to send capital gains to the CRA finally in this case. Again, we apologize, everybody. Although it's not our doing, okay, this was basically because the government had changed course essentially and deferred the capital gains inclusion rate change to January 1st, 2026. So we're just waiting on them to give us the certified forms, and we finally got them. And now by the end of this week, you're getting the next version that will have the certified forms. All right, so
Okay.
Anna, I've been
Thank
using,
you.
yeah, go
Thank
ahead.
you, Anna. No, she's just complimenting us. Thank you.
Oh, thank you very much, Anna. Okay, it's
You're
good.
welcome. This is from somebody I know. She handmade it.
Yeah,
So
yeah, yeah.
thank you.
And I'm of
Uh,
Greek descent, so there you go. So so there it is. Thank you very much, Anna. It's very kind. It's very, very kind.
okay.
Thank you very much.
Ravi, do you know the payments? How the payments are made to a self-employed with seasonal variation who opt for UIC and pays the premium? Mm,
Ravi, can you just tell me what UIC is? I'm sorry, I'm drawing a blank on the
unemployment insurance contributions?
unemployment insurance. Yeah, maybe.
I think that there's a new term for that, but I don't think it's UIC anymore. But I
Yeah, can you
believe
just
that's
confirm that?
that's the probably the old
Ravi, can
term.
you just confirm that just to make sure? No problem, Kirk. Fred has a question in the
Yeah,
meantime.
due to changes to the capital gains, does the form change on new file automatically, or do I have to go through the interview again and make changes, or will I just be able to file once the government has straightened it out?
No, you don't have to change anything. Our entries in the beginning, you just had to put the date of disposition was very important in order to apply the inclusion rate, the original inclusion rate change. Now, again, even if you leave the date there, nothing changes as far as the entry page. So all you have to do is just make sure you recalculate the return under the new version. So go back to the review tab and then go back to the tax return and make sure you recalculate, and then it's going to populate it on the new form for 2024. Okay, so you don't have to change anything.
Okay, so Ravi mentioned it's the unemployment insurance premiums. Isn't it
Unemployment
EI?
insurance premium. I don't know the new term. Okay, it's
I think
employment
it's
insurance. Yeah, sorry,
yeah,
Ravi.
I
It's
think it's
employment
EI
insurance.
right now.
It's EI now. Yeah, it's EI. So I just wanted to make sure, that I was correctly understanding your question. Do you know how the payments are made to a self-employed with seasonal variation who opts for? Okay, well, Ravi, you have the option of contributing as a self-employed individual to employment insurance, but it's only really certain programs. It's not pure employment insurance that you're paying into, and you do that through your tax return. It's simply done as an additional tax that gets charged on your tax return during your net federal tax calculation. Okay, so that's essentially how that works. And then if you're eligible for that program, once you apply for it for Service Canada, you simply collect the payments with them. Okay, that's essentially how that would work. Uh,
Ravi, by the way, I still use that term too. I'm still
Yeah,
old school.
well, what
Sorry.
was it? What was it? 30 years, 40 years that we used that term, and then all of a sudden it became employment insurance.
Mm,
Like all of a sudden the term changed. I still call the Canada Workers Benefit. I still call it working income tax benefit (WITB).
okay.
I still catch myself all the time calling it that. So or child tax benefit, right? Which is now the
Yes.
Canada Child Benefit, right?
Yes. I still.
Canada Child Benefit. Nice. It's a nice. You could tell the CRA put a lot of money in the marketing department. So there you go. Thank you for your. Okay, so you get, yeah, no problem. That's what we're there for. So
Mhm.
like I said, just wait. In the next couple of days, it's coming. Okay, the version is coming in the next couple of days. Just make sure you recalculate your return. Okay, just go back to the review tab once you've downloaded the update.
Yeah, I usually suggest just review your return and go to
Mhm.
step 3, recalculate, and you should be fine.
Yeah, there should be no watermark anymore. This is preliminary version of the form. Okay, you'll see once you recalculate under the new version.
Okay, I don't see any other comments right now.
Hmm.
Okay, you want to this year the tax deadline, April 30th?
Well, April 30th, but depending. right? Because it could be June 1st if you have capital gains. So remember, for everybody, you don't have to panic. Okay, if you have capital gains on your return, okay, what's called you have until June 1st. The government actually delayed the
For the
deadline.
payment or for the remittance of the tax return?
Remittance of the tax return. That
Okay.
includes interest and penalties, but that's only for people who have capital gains. If you don't have capital gains, there's no excuses. It's April 30th. Okay. But if you do have capital gains, you have until June 1st. Okay. So the government did delay in this case, the deadline due to this because, I mean, I don't want to point the finger, but I'm going to point the finger. They were responsible, right, for this delay. So because of that, they had to delay the filing of the return. They delayed also the trust returns as well. I think till May. I think now is I think May 1st now is the deadline for T3 returns when ordinarily it was March
Hmm.
31st, right? So that's what they've
Yeah.
done there as well. They delayed it by another month.
Fred, thanks, guys. Due to
Mm-hmm.
it being a primary
It's in sale.
residential sales, I
Yep.
shouldn't have any changes or capital gains.
No, no.
But I believe a
If it does,
Schedule 3 gets done
you
anyways, right?
have to. Yes, yeah, yeah. You have to declare it. There's like a section on Schedule 3 where you're ticking a box where you're declaring, in this case, that you have a principal residence designation and disposition. But remember, Fred, you have to designate all the years. Okay, remember that because the designation is an election. Okay, you're not required to take the principal residence exemption because you might have two properties that are eligible, and you might want to split the years that you owned both properties when you're making the designation, because you can only designate one property at a time. So, for example, if you've got a cottage and you've also got your principal home, your cottage is also eligible for the principal residence exemption. However, you can only designate one property per year. So that's why you have to choose, right? And that's why you elect. Okay, so as long as you designate all the years, you're fine. There is no capital gain. You're absolutely right. And at that point, there's nothing on your return.
Okay. I don't have a new question at the moment. Any tax tips you want to share,
Well,
Gerry?
let's go through some of the changes, some of the new stuff that came into the tax return this year. Number one, remember charitable donations. The government extended the deadline till February 28th of this year, which means that if you've made any due to the postal strike with Canada Post, if you make any donations between from January 1st till February 28th, 2025, okay, you could actually take those donations and claim them in your 2024 tax return. So you can really double up. Okay, you can really compound the credit of donations for 2024 due to that. Okay, so that's why I want to make sure to mention that. The other thing I want to mention as well is home buyers plan. There's also a pretty big change to home buyers plan, where now the withdrawal limit has been increased from $35,000 to $60,000 starting 2024, and the government's delaying by 3 years the first required repayment. Ordinarily, it was 2 years after your withdrawal. Now it's 5 years after your withdrawal, but that's only temporary. That's only if you make any withdrawals from January 1st, 2022 till December 31st, 2025. So any of you who are thinking of buying a property and withdrawing from your home buyers plan, do it now. Do it by December 31st, because now you will have 5 years to make your first repayment instead of 2 years, which was the old rule. Okay, so that was a pretty significant change to the return. So I see a couple more questions came
Yeah.
in.
Zinab, could you please explain the box 28 exempt? On my T4, it's noted exempt, so what should I choose?
It depends what you're exempt on. Are you exempt on your employment insurance? Are you exempt on your Canada pension plan? And if you're in Quebec, are you exempt on your provincial parental insurance plan? It depends, right? It depends on what you have. Okay, because that's what the program's going to give you as an option. So you have to make sure to see, basically, the quickest way of seeing it is look at your CPP contribution box, which is 17 or 16, sorry, for the rest of Canada. Look at EI, which is 18, and for those of you who are in Quebec, you would be looking at your box 55. If any one of them is zero, that means that you are exempt one of those contributions. That's what you would choose. Okay, so just make sure to double check your slip to see which one you're exempt.
Next question is from Lisa. My
Mhm.
mom lives in an assisted living. I pay some of her medical expenses. Can I still claim any of her unused disability amount even though she does not live with me?
Yes, I don't believe there's a requirement to live with a person for disability. You could claim it. Let me just double check that information. Um, Let me see. Just give me 1 second here. I'm just going to go to the folio. for disability and see if you have to live with a person. I'm just trying to remember. Transfer of unused. Supporting individuals, a person other than the spouse who supports the eligible for, with disability and whom the person depends on, blah, blah. In each case, question of fact. But for purposes dependent, the fact that indicated support is not it's only given on the okay. Rather, the eligible person's disability must be a dependent on the other for support given. Where the eligible was in receipt of social assistance and financial support. Okay, support does not 2027 and subsequent tax years. A wholly dependent person is as known as eligible for the dependent caregiver. Yeah, I don't believe you're required to live with a person. That's at least again double check with the CRA just to make sure. But to my understanding, I don't believe since 2017 you weren't required to live with that person.
Okay.
Um, mm,
Clifford, I
yep.
think there must have been a little glitch because it came up three times.
Okay.
Talking about designation of sale of a principal residence. When I check 50% sharing of capital gains, even though there should be none, does that transfer the principal resident declaration to my wife's return?
It should. But if it doesn't, you'll have to reproduce it in your spouse's file. But I believe it does. I believe the program does pick it up and actually makes the claim, produces the T2091 form in the spouse's file as well. I believe it does do it, yes. But double
Okay.
check.
Fred, also in the notes after calculating taxes, there is a note about first time homeowners buyer plan, which I am not enrolled in. How
Yeah.
do I delete that note?
You can't delete the note. It's just a memo that the program produces just to give you some tidbits on optimizing your tax situation. Not every single one of those messages are relevant to you necessarily, but we have them there just to give you some tidbits and some tips and tricks on optimizing your return. Just ignore it. Very simply put, just ignore it. You can't, unfortunately, you cannot remove it from the software. Unfortunately.
Okay. And then when you go to the net file pages, it's going to tell you whether it's net file ready or not.
Yeah, no, it's just actually I know the memo. What it's telling him is you should consider putting in the FHSA, right?
Correct.
So that's what it is. So it's just a tax tip. It's not something that affects the return. In this case.
Okay. Why don't you explain? There's a common mistake. People who make RSP's contribution the first
60
60
days.
days of a calendar year,
Yeah.
how they need to be reported. Because a lot of people say, I'm not using it this year, so I'll keep it for next. Like, let's
Yeah.
say I made it February 15, 2025. I don't need it for my 2024 tax return. I'll keep it for
Hmm.
2025.
Hmm.
And a lot of people don't report it.
Yeah.
So, what is the
Yeah.
proper procedure? If
Yeah,
you
well,
want
I
to
mean, the
just go.
proper procedure is you have to declare it for the year before, even if you're not using it. You have to declare it as a contribution for the previous year. So, let's take right now, what's 2025, right? So, any contributions you made from the 1st of January till March 3rd, 2025, have to be declared on your 2024 return, even if you choose not to deduct them. They still have to be declared in 2024. All right, then you just carry them forward to a future year, and then you claim them in the future year. That's how it works, okay? Because your contribution here on your Schedule 7 is usually right after the first 60 days of the year, which last year would have been March 2nd, 2024, until March 3rd, 2025. That's your contribution year, okay? And that's what you're declaring as contributions for the current year. All right? Yeah.
And the form is well done because you have
Yep.
the section, this
It
the
tells you. It
it
tells you
tells you
flat
the
out
first,
that's
yeah,
what you have to do. Yeah. It
and then
tells
you
you for
just claim it at the bottom. If you don't want to take the full amount, there's a place at the bottom. You say how much you want to claim on your tax return,
Yeah,
how much
exactly.
deductions you want to
Exactly.
take.
There's two
So the
lines, right? There's
mhm,
a line for in the for this year would be March 2nd till December 31st, and then there's a line for January 1st, 2025 until March 3rd, 2025. And that's where
yeah,
you declare it. You have to like I said,
correct.
I can't stress this enough. You have now if you have not done so in a previous year, let's say you have first 60 days of 2024, then you got to amend your 2023 return to declare it, and then you could claim it. You can't put it as an unused amount because, and then if you do that when you transmit to the CRA is going to reject it offhand, and they're going to say, "Well, I'm sorry, I don't have this amount in my data bank." And that's where we start getting calls from clients. Well, I don't understand. Why can't I claim it? It's unused. I never claimed it. Well, the problem is you have to declare it in the previous year. That's why. Okay, that's why
Yeah.
the government
And at the
refuses it.
bottom of the of that same form, it asks, if you don't want to take the full amount,
Yeah.
of your contributions, what
Hmm.
amount you want to take. So
Yeah.
that happens all the time.
Exactly.
So
Exactly. You choose
mhm,
how much you want to claim. Absolutely right. Okay. So now, since we're still waiting for another question, I'll just mention another big change that happened this year.
mhm,
That's for short-term rentals. Remember, for those of you who are listening to us right now, you rent it under an Airbnb or a Vrbo, or you do basically to the government. A short-term rental is less than 30 days. Okay. Remember that. You have to be, the government can refuse your expenses to claim against the short term rental income if you were in one of the two situations that I will mention right now. Number one would be if you are in a municipality or a borough where they don't permit short-term rentals, and number two, or it's actually not and but or number two, you are in a borough or in a municipality where they do permit short-term rentals. However, you do not seek out a permit. I know, for example, you and me, Ida, we're in Montreal, and in Quebec, in the whole province of Quebec, you have to seek out a permit in order to exploit an Airbnb, right, with our
mhm,
properties. So
correct.
if you didn't have that if you don't have that permit, then again, you are non to the government non-compliant, which means for the days that you are non-compliant, the government will refuse your short-term rental expenses. Okay, so just be aware of that for those of you who are doing Airbnb and Vrbo. Okay, very very important change that the government made,
Mhm.
quite consequential to a lot of people that are listening to us today.
We have a very good question from Anna,
Yeah.
and a lot of people, and that was one of the reasons for the RSP I wanted to mention.
Mhm.
How many years can you defer RSP and FHSA
By
contributions?
defer, I'm assuming carry forward, and I'm assuming you want to carry forward. Okay, so RSP is basically until you turn 71. Okay, that's essentially how long you can actually carry forward. But be careful though, because that carry forward could become an over contribution if you contribute too much. If you don't factor in that you've already made that contribution in the past. Because remember, even though you're not using it, it doesn't mean it's not taking up your room. Okay, because you have contributed. Yeah, carry forward. Thank you, Anna. So in this case, the way it works is even if you're not using it, if let's say you contribute it, you want to carry it forward, it is using up your RSP contribution room. So when you are contributing in the future years, if you don't want to use it, okay, you have to factor in that you've already contributed that amount when it comes to your limit. A lot of people make that mistake and they fall under an over contribution scenario. Okay, so just be very mindful of that. So you could do it up until the year 71. And then when you turn 71, you have to contribute it then at that point. Otherwise, it's lost. Okay, you will no longer be able to claim it. FHSA is different. FHSA is basically the soonest of, so it'll expire. The carry forward expires the earliest of. You turn 71, the year you turn 71, 15 years after you created your account, your FHSA account, okay, or the year you make what the government calls a qualifying withdrawal, meaning you buy your first home and then you withdraw and you basically pay into buying your home. The earliest of those three is when the FHSA expires. Okay, so be mindful of that. And now the good part with the FHSA is if you fall under one of those three things, if you withdraw, you're simply grabbing the income and you're just putting it into your home. But for the other two scenarios, where if you turn 71 or 15 years after the account gets created, when it expires, you have the option of transferring the whatever amount is there into your RSP accounts. Okay, so that's the one advantage that you have with the FHSA.
We have a question from Dave.
Yeah,
My 7-year-old son has MS and is living with us. He
mm,
is receiving CPP disability pension. Can I
yeah.
claim a sorry, can I claim a caregiver tax exemption for him on my tax return?
Yes, absolutely, you can. Yeah, yeah. The first of all, he's lit. Well, you don't even need. Actually, a few years ago, the government actually took out the requirement for living with a person, as long as as long as you're provided the needs of that person. But in your case, you're living with him. Chances are he's got a disability certificate which proves the infirmity. Which, by the way, for the caregiver exemption, you don't even need the disability certificate. All you need is a note from the doctor stipulating. Yeah, 47. Yeah, because Ida, you read seven. That's why
Oh,
when
I'm
you first
sorry.
read it, yeah, you said 7 years old, but it's actually 47. No, even if he's an adult, Dave, it doesn't matter. You're claiming the caregiver exemption. You can claim it. You can claim it. And if you can actually prove as well a disability, you could also take his disability tax credit if he doesn't need it. But that's an excess. But at the very least, I see he's got a CPP disability pension, which means he's probably still working. That's what I'm assuming in this case. So he can, if he's getting disability pension, then he's already got disability. So you know what, that answers that question. He pretty much has the disability certificate. So Yes, you can. The answer is absolutely yes, you can. You can claim it in this case.
He's
Where?
asking where.
So, okay, so Dave, what you're going to do is, um, Dave, let me ask you. Okay, so it depends. There's a few factors you have to consider. Okay, on what's called he's okay. He's not working. Okay, so he's not working. So that means you'll likely be getting the excess amount of disability on your return. Now with UFile, what you need to do is you have to add day. You have to add your son as a dependent. Okay, just like you would add a child. Okay, so like a young child, a child under 18. So you're adding your son as a dependent, and then there's a you go to the medical section, medical disability and caregiver, and then you will have an option there called infirmity and disability amounts. You click on the plus sign of that one, and then you declare the disability of your son. And then by doing that, the program will automatically calculate and claim any transfer amounts, like the disability excess amount, and will claim the Canada caregiver amount automatically on the appropriate line. The Canada caregiver amount could be any one of 5 lines, but UFile will simply handle it. It will simply claim the proper line. But the key is you have to add your son as a dependent in your UFile file. Okay, that's the way to do it. And then declare his disability under the medical expenses section, which should be in his left hand menu or navigator by default.
Okay, Valerie has a quick question regarding the short-term rental.
Yeah.
Did you say I need provincial license in order to claim rental expenses?
Yes, you would, depending if your province requires a license. You understand? So, for example, I know in Quebec we do. Okay, we require a license, but some provinces don't. Okay, so you would have to check to see with your province to see whether you are required to have a license in order to claim, in order to be able to exploit an Airbnb. Otherwise, your expenses will be refused. Okay, it's as simple as that. That's what the change is. So it's either a you're in an area where short term rentals are not permitted. And the United States, well, how does that happen? Well, me and Ida could tell you Montreal they're not. Okay, and that's in all of Montreal they're not permitted at all now. Okay, especially for 3 seasons out of the year. The city center just announced it. Okay, a few like a month ago. That
Mhm.
basically fall, winter, and spring
Spring.
you and nobody's permitted to have short-term rentals. So if you're doing short-term rentals during those seasons, now you're non-compliant, which means that for those days that you're renting a short-term rental, you cannot claim your rental expenses. Okay, for those days. All right, as a short-term rental. So now you have to check with your now if you are permitted. If your municipality permits it, but your province requires or your municipality requires a permit, then at that point you need to double check to see if there's no permit required, then you're fine. You're not subject to this rule. But if a permit was required, then you do have a portion of your days that are non-compliant at that point until you get your permit.
All right. So that
Okay, so I
brings
think
us
that's
at two
it.
o'clock.
Yeah, there you go. All right. Hey, we finished on
All right.
time and all the questions answered. That's
So that's
awesome.
good. Okay. Well, we
Yeah.
thank everybody who've asked us their questions. We really appreciate it. We actually do this for you to help you out a little bit. Thank you, Gerry. It was very much appreciated. So that's all I have to say. So thank you very much, everybody, for listening. Don't forget to follow our page to find out if whenever our next one will be.
Yeah,
All
so follow
right.
our page and follow our YouTube page as well for other videos that we post on various topics on the software and on taxation as well. So don't forget to give us a follow. All right, thank you very
So
much,
thank you
everybody.
very much. Bye.
Bye bye. All right, we're